The Trade Desk reported fiscal year 2022 fourth quarter earnings just a little bit ago, and the stock is up 26% after announcing these results. So I'm going to do a brief review of those earnings and try and figure out what caused the stock price to go up so much and whether or not that increase was justified. So let's get right into it. So revenue increased by 24% in the fourth quarter to 491 million. Now this is truly impressive because many other ad reliant businesses have reported earnings for the fourth quarter, and very few, if any of them, can I recall off the top of my mind, reported revenue even growing in the double digits. Now, I follow a lot of these companies, including Roku, uh, Meta Platforms, Alphabet, Snapchat, Pinterest, and many, many more. All of these companies rely on ad revenue to support the business, and most of them reported revenue growth in the mid-single digits, if anything at all. So the fact that the Trade Desk was able to report revenue growth in 24% was truly impressive and really follows through what the Trade Desk did in the third quarter. In the third quarter, it reported similarly robust revenue growth and nearly 3 times the growth of the industry overall. So the Trade Desk is growing fast and it's gaining market share. To make matters more impressive, the Trade Desk reported an earnings per share of 14 cents. This was an increase of more than sevenfold from an EPS of 2 cents in the same quarter last year. So not only is the Trade Desk growing faster than the industry and gaining market share, it's also doing this profitably. Right? It's one thing to grow your business at a loss, which many tech companies are doing, right? They're growing, but they're losing a ton of money on the bottom line. That's not the case for Trade Desk. That's what makes the Trade Desk so impressive, and that's why this quarter the stock was up so much. Gross spend on the Trade Desk platform increased by 25% in 2022. So that means advertisers are spending more on the Trade Desk. The Trade Desk takes a percentage of all of that spending that happens on the platform. And you can see the spend on the platform and the revenue increased just about at the same rate. So that tells me that the Trade Desk didn't grow its revenue by demanding a greater percentage of spending on the platform, which is a lower quality way of increasing revenue rather than just increasing revenue because your clients are spending more money on your platform. Cash flow from operations of 508.7 million, that in 2022 overall was up from 378.5 million in 2021. So profits are growing, cash flows are growing. All great news. The Trade Desk is riding this secular tailwind of connected TV, right? Streaming TV. The Trade Desk has been steadfast in predicting the future of TV is going to be advertising funded. Now, the Trade Desk has been calling for this 3, 4, 5 years ago when Netflix was adamant that it did not want an ad-supported tier. And now Netflix has relented and decided to launch an ad-supported tier because that's where it sees the future of growth of its platform. Without ad-supported versions, the company would just have to charge so much money for a subscription, which would possibly turn away customers. By having an ad-supported version, it could charge, I don't know, $7, $10, maybe $15 per month less than the non-ad supported version. And so that's why the Trade Desk believes that all TV is eventually going to become ad supported, because without ads supporting supporting content, it's just going to be too expensive for consumers. The Trade Desk revenue split right now is 90% North America, 10% international. The overall ad industry split is 33% and 67% respectively. So this is an area of opportunity for the Trade Desk to boost up its international sales, international revenue base. For the first quarter, the Trade Desk is forecasting revenue of at least 363 million. Sequentially, the first quarter is lower ad revenue than the fourth quarter. Of course, the holiday season, marketers are more interested in getting the attention of consumers during the fourth quarter. All right, so that's all I've got for this video. And to answer the question, is the trade desk stock price increase justified? Based on these results, I would say yes, that increase was justified. Growing earnings by 7x, growing revenue nearly 3 times the market, gaining market share, increasing cash flows from operations, all great news, all reasons why investors in the trade desk stock should be pleased with its fourth quarter earnings report. As always, I truly appreciate your viewership, and I hope you'll see me again next time for another video. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.